Good morning, everyone. This should be for the trade findings and adjustments for Thursday, August 27th. Unfortunately, I had an appointment come up and I am unable to make it, so I am pre-recording this for you the night before. This is going to be short, but it's an awesome trade. And it also is going to talk, I'm also going to postpone the part 2 of the risk reward till next Tuesday. But first of all, to start off, we have a Fed, the chair, the Kansas City chair Fed. She's come out and she said, "Hey, there's big risk building of a double dip recession." And yes, I put this in here because obviously, if there's another coronavirus resurgence and we start shutting everything down again, guess what's going to happen? Of course, right? It's going to be that worry that I tell you we could still have that big drop here in September, October. It's a historical pattern. The historical pattern says we're in trouble September and October, but what she's warning us is we've seen this once before. Don't be surprised if it happens again. Now, if I go ahead and head out, let me head out. I want a different chart. Let me head out to here. Let me do the SPX is what I want here. Let's get our chart, get it ready. Get that out of the way, bring it up. So let me just show you the historical pattern that I keep talking to you about. Let's go 5 years. So what I'm worried about is the historical drops. Sometimes they're more pronounced. This was like in October through the end of the year. Sometimes there are these little ones. Sometimes they're more pronounced. Sometimes they're big. But we have this historical pattern of, it's not what I wanted. This historical pattern of having these drops in our stock market. And again, we really didn't have one in 2017. That would be a little drop. 2016, it's right there. 2015, it's right here. 2014, it's right here. We just have these historic blips. And these historic blips, to a certain degree, can't be ignored. Now, some people are going to say, hey, I predicted it because I told you, way back when, and it's the coronavirus, right? There it is again. There it is again. There it is again. Really tiny on that one right there. But of course, the question is it going to happen or not? Historically, they do. And now, to a certain degree, we have a reason to look for it. And she lists all kinds of reasons for us. She lists that the Fed policy of bringing more inflation in could cause it. A resurgence in the coronavirus, now that we're going to stick all the kids together, because you just know they're going to keep their masks on, right? Come on, kids, wear your mask. Don't lick each other. Don't share ice creams. Don't do this. Don't do that. All we ever say is don't do this, because they're always doing it, right? It's just something to pay attention to. And obviously, no one really knows, but I felt this is a Fed chair that finally is on board with what I said going back to June. Going back to June is the first time I mentioned be ready for another drop. Be ready for a double dip as we have a resurgence of coronavirus cases. Don't be surprised with an election run and things getting so nasty that we see a significant drop in our stock market. That's the way they work. It happens all the time. And we had the third worst performing month by returns in September, and the worst historical month when it comes to gains or losses, because it's primarily a loss, in October. So expectations are things are going to go to pot. So your trade should be non-directional, or it should be one that you're going to give it time to get through. And if I was looking at a trade, I had this talk with Mike Soltz today. For those of us that own Apple, or for those of us that are going to be ready to get back into some calls, some leap calls, I would not buy the position. But if you do own shares of Apple, or you do own some long calls, I'm going to make the suggestion to you that a covered call on October 2nd and using the 510, today, this covered call could net you $31.32. Well, Kevin, what if you don't quite believe me and you're not quite sure if this is the trade for you? Or let's put it this way. I want some more upside. I'm not all in on the drop. I'm not all in on believing that it'll go down right away. Maybe go to a 525. You can still get $25.47. Or if you take a look at it, your covered call could offer you a a 5% return for 5 weeks. I guess 5.5 because we put on Thursday. 5 weeks and 2 days with a holiday, a stock split where it typically will pull back. You have a 5% at 525. You've got a 5% covered call return here. So if you've owned the stock, and just taking a quick look at it, if you own the stock, and I'm just gonna pull out a round number here, have the protective puts here, might take those off. If you own the stock at 201, right? 201 with a protective put, maybe it's time on half of these shares to sell that covered call. 210 is your cost basis, or 201, excuse me. It'll shrink down to $50.25-ish. Your 525 or your 520 covered call, use the 525, divide it by 4. 525 divided by 4, 126.25. Doing the math, cost basis is going to be down to $50.25-ish. On this one, you must make it 26. you're going to be selling it up here at 126.25. And if you take $31 and divide that by 4, $31 divided by 4, that's another $7.75 of credit. It kind of seems like a no-brainer. If I was to take this position and adjust it, add an option, do those October 2nd, 69 of them against the stock ownership, put it out to 525. $25. $25 is the midpoint. Amazing. Put it at 520. 27.27 is a midpoint. Put it at 510. $31.32. On half of the shares, it might do this stock split. Kind of seems like a no-brainer to me. It's what's going to give us our downside protection. If you even did it against your calls, right? If any of you still have calls, although, I mean, all these are already in place. So this really wouldn't work, but taking a look at them, right? If you had calls you spent $27 on at 230, you could sell the 510 and be in a risk-free trade. Risk-free trade, taking $30 more credit. It's like you're selling at 540. 230 to 540, we're talking about $310 of profit on a $27.65 return. There's another 1,000% return. How often have you had a money manager say, yeah, we just got 1,000% return for you? If you wanted to start a new trade and look at a calendar of some kind, September 22, if I was going to do this, I would look at something like a $500. And just going short periods of time. There's $30 to get you through the next 5 weeks and a pullback. Now you can't get called out if it goes up. You've got to roll this one up even farther, right? Your cost basis is $80. So you can't afford to really get called out until you're at 610 or higher. But what a way to knock off a third of the cost basis. And in this case, it would be 8 weeks, 7 weeks, 7.5, 8 weeks. 8 weeks, you knock off a third of the cost basis, when historically Apple sells off after a split. Kevin, are you sure? Has it done it that way before? Just look at the chart. Probably have to go out to, I think it's less than 5 years ago. Trading at 75. Let me find out. Let's find out, when did Apple split? When did Apple split in the past? June 2014. So June 2014, right there, there's June, opened at 90. Boy, I don't see it. We don't have it. Was that little dip? I know it went from like $75 down to 68, lost roughly 10%. Then it started higher again. So interesting, just interesting. It's an opportunity that I'm looking at. It's an opportunity for people that already own shares. It's just an opportunity that could be phenomenal. And even if you get called out, you don't have that many in. You got to be careful you don't take a huge tax burden. But I'm really excited for getting a killer profit on Apple. So that's my trade on a current position, starting out with a shares on maybe half of them, shorting a call that you could do at anywhere from 510 to 525. Let half your shares go for a great profit. If you have a leap, same thing. Put it out at that 525. And October 2nd, you're starting a new position, go out to a September 22, and you can then do a short call against it. Or instead of spending $80, you can wait and see if we get a split price at 125, see if it pulls back to 100, and then just get into shares then. But it's all Apple all the time. I'm going to do the best I can to get this posted right now and get email out to you. I apologize for not being available Thursday morning, the 27th, to do this, but hopefully this gives you something to look at. Take a peek at it in your own accounts and see if there's an opportunity for you. Have a good day, and I look forward to seeing you guys on Monday night. Bye-bye.